We've talked about lots of things amongst ourselves, including topics that I will try to touch on a little bit. But everybody else outside was talking about other things. And I thought I would just very quickly tell you a bit about Greece, because that's clearly on quite a few people's mind, and it animates the market and the market players in ways and senses that actually could further draw the attention of regulators and supervisors. I certainly hope so. My take on what is happening at the moment is that clearly in a situation where a country is under attack for having had its fundamentals either moving in the wrong direction or its number certainly being either poorly disclosed or purely erroneous from the start, the members of the Eurogroup, that is a group of 16, including Greece, sovereign states, have decided within the parameters of a treaty to react. I know that the markets have found the reaction a bit too slow, a bit confusing, a bit dislocated. But that's, if I may say, the way European Union has been built over the years. That's the way the Eurogroup has always worked, from crisis to crisis. And the Euro formation itself was a bit of that at the beginning. And I would really warn commentators, analysts, and market players to a bit of caution as to their comments or their immediate conclusion from what they see as dislocated, fragmented, or disorganized. Because you simply have to think of 15 different sovereign states with their respective constituencies having to deal with one particular issue, which is common to them all, because we're all part of the same currency, and having to deal with their respective domestic issues. It's a little bit as if you had, say, the United States, Mexico, Canada, and a few other, say, 13 other countries to decide on the common fate, assuming they had the single same currency. So it's not an easy matter. Certainly it's unprecedented. And I think we have to really look at it with the right perspective, which is, how does a group of sovereign states come together to rescue one of them, which is tied to them by this single currency that is the euro. So in that vein, I think that, yes, it has been a little bit chaotic because we moved from February 25th from February 11th to March 25th to April 11th, which was the schedule that we had to follow in accordance with the treaty to come to a plan under which we decided that, yes, we would, together with the IMF, which brings to the table its experience of difficult situation and remedies to difficult situation, we would support the country. And that's where we are at the moment. There is a time for everything. And the IMF and the European Commission, together with the European Central Bank, are currently negotiating the terms and conditions under which Greece is going to have to recover by sorting out its public finances, by taking harsh measures that for once, and for the first time in many, many years, a Greek government has decided to actually take up to Parliament and confront its public opinion with. And that includes measures that have been recently also adopted by Ireland, which ranges from cutting civil servants' salaries by a significant amount, questioning the sustainability of pension scheme and possibly pushing back the retirement age, to collecting more tax than was collected in the country, cutting public expenses, and so on and so forth. And more importantly, accepting that this whole process is going to be monitored very closely by the IMF and by representatives of the Commission that operate on a joint brief. So this is a process that is ongoing at the moment, and clearly you see here and there parliamentary debates, posturing on various scenes to simply deal with local public opinions in the domestic countries that are part of the process. So that having been said, I would just indicate that while time is of the essence, clearly we all need to accommodate processes that are based on the rule of law and on democracy, which itself was produced by Greece. Now, on that vein, I would like to at least acknowledge a debt that we have to the Greeks, and that has to do with words. We owe the Greeks many, many words. If you sort of introspectively look at the words that we use on a daily basis, and I will take just two of them, three actually. One is crisis. Crisis comes from the Greek language. And if you go back to the ethics of Aristoteles, he certainly provides and offers and discusses and dissecates a remedy to crisis, which is phronesis, however you pronounce it. I suppose I'll be indebted to the Greeks for having mispronounced phronesis. And phronesis is clearly what we should all be about now, and it's drawn from experience, wisdom, and moderation. And there's a lot to be said for this remedy to the crisis that is diagnosed, prognosis, again, a few more Greek words here, by Aristoteles. Now, there's a lot of debates going on at the moment as to whether we are neo-Keynesians, neo-monetarists, whether it's the new age of neo-capitalism, whether Colbert is back, and whether we're moving into an era of state intervention in a big way. I know it was very useful to many of us. I think it's not what necessarily matters at the moment. What matters, and certainly what I have experienced personally over the last 2 years, is what we had to rely upon, which was essentially pragmatism, trying to learn from experience. And certainly the Great Depression of the 30s has helped us a little bit in trying to face, in my view, a number of evils that could have rolled out as a result of the crisis that eventually, so far, we've been able to prevent. And I'm here thinking about protectionism, which, listening to Pascal Lamy, the head of WTO yesterday, we have avoided in the main. We've managed to refuel the banking and interbanking markets and to restore a bit of stability on such markets, and actually has actually enabled most of the players to do reasonably well as a result, and I will come back to that in a minute. And we've also been able to kickstart and reset our economies, which for the first time in many decades was clearly negative in 2009, and which is expected to turn positive, and positive in a big way in 2010. Well, big way, at least 4% on a global basis. So pragmatism, drawing from the experience of the past and learning from that, and certainly better coordination amongst us, have been the keys to what has been achieved so far, and which we generally lose sight of, simply because we're always sort of ahead of the curve and expecting new announcements and new measures and more to actually fuel the machine. Now, as I'm just coming back from Washington, where we had the IMF and World Bank annual meetings, spring meetings, plus a G20 Minister of Finance meetings and a few other very interesting sessions, I thought I would just comment on the theme of the global imbalances that we are facing at the moment, because this is clearly a theme that we discussed over the last 3 days, and touch on probably the sort of framework for growth that the IMF has been working hard on, and which we are in a way duplicating at the European Union, with Mr. Van Rompuy, who is the president of the European Council at the moment, assembling a task force to really identify what we need to do to keep the momentum going in relation to growth. And just as an example of these imbalances, I don't want to draw on your own respective experience of where growth is coming from, for those of you who are in international organizations. But I would be very skeptical that the massive source of growth at the moment for your organizations comes from Japan. And I would be surprised if it came from Europe. UK included, by the way. A lot of people think that the UK is a separate thing. It's a beautiful country, an island, but it's very much part of the European Union, especially for those based in London and who deal with the European and Middle East issues. More likely, some of it is coming from the United States. But more likely than that, it's coming from East, from Asia. And, when I heard my colleagues from China, from India, from Indonesia, and obviously from the South, that is from some of the Latin American countries, particularly Brazil, given its size and range of raw materials and very industrious as well as agricultural approach to the flow of products, you can tell where growth is coming from. And you can tell that while there is imbalances still in the system, there is a rebalancing act that is taking place at the moment, where clearly, whether we like it or not, growth is clearly fueled by those Asian countries, those Latin American countries, and by so doing, the rebalancing is operating to the benefit of emerging markets. Is it bad news? Not so sure about it. Clearly it's bad news when you sit, in the center of Japan or in the center of Europe, where it's quite fragile and a bit anemic. But from a global perspective, it is certainly a good thing that emerging markets are coming to the fore, fueling the growth, and by so doing, taking a lot of their population out of a state of poverty in many places. Not so long ago, there were many discussions with our Indian colleagues concerning, the state in which Indian farmers, for instance, were on the verge of committing suicide on a daily, weekly basis because they couldn't make it. There were discussions in the same vein with Korea. And it was not so long ago that a huge size of the Chinese population was under poverty levels. So that is clearly changing, and this rebalancing act that is taking place, much to our regret sometimes, is certainly from a global perspective a good thing. However, clearly there is a whole range of countries that we call nicely the least developed countries, the LDCs, that are still suffering, and for which clearly all of us, that is developed countries and emerging countries, have to close ranks to actually help out of the poverty that they're in. In the main, if you look at the map of the world, it's going to be African countries and essentially sub-Saharan African countries, which are very much a target, though, of the appetite of those that are in sheer needs of raw materials. I'll come back to that at the end of my comments. Now, what clearly we were committed to address collectively at our G20 finance ministers were, as part of this framework for growth, a growth that is strong, because we need employment around the world and in all countries. Again, there is a rebalancing as well, which is not a happy one, where unemployment is shared on a much broader basis than it used to be. So we need a strong growth that actually generates jobs and is not only fueled by productivity gains out of either improved technologies or use of the current workforce. We need new jobs to be created by our economies. Second, we need a more balanced growth, and clearly that goes to those countries that produce imbalances, whether they have a determined economic policy to that end, or whether it's as a result of the imbalances that are generated by the different levels of productivity and cost basis. And finally, we need a sustainable growth that cannot be simply fueled, led by public funding, which we had to do in 2009 because there was no option, there was nobody else that invested at the time, but a growth that is led by private demand. Which is why here it's clearly important that banks, financial institutions at large, and I include in that insurance companies, be able to do the job that is, in my view, their core business, which is to finance the economy and provide credit not only to large accounts, but also to SMEs and medium and those in between, those intermediary companies that are so key to our growth, certainly in my part of the world. Now, that sustainable growth, which requires the involvement of banks and financial institutions in their core business, also requires, and clearly we're seeing it unfold as we speak, also requires solid and restored public finances in many corners of the world. Because whether it's for structural reasons inherited from the past and from bad habits, or whether it's because of recent massive investments that were just inevitable, we have to restore our public finance. And we cannot just keep borrowing from the next or the following, after the next generation, simply to fuel imbalanced models of development. Now, the framework for growth that we have sort of commissioned the IMF to do is exactly intended to review that we are marching in the right order and focusing on the right objectives. And it's, I think, the job of the G20, either at finance ministers level or more importantly at head of states level, which was one of the, that's also a creature of the crisis, by the way. The G20 did not exist at head of states level. It's a pure transgression of previous groups or previous rules. The finance ministers and central bank governors G20, which was a pre-existing group, eventually morphed into G20 group at head of states. Now one might wonder, is that appropriate? Is that the good representation? Is it this new mobile government of the world question? Clearly it's a point that France will be interested to discuss, explore, consider when it is sharing the G7 and the G20 next year in 2011. Because while it's quite nice to be part of the club, there are clearly members that are not part of the club, that are not represented. And to see that, for instance, Africa, that I just mentioned, is only represented by South Africa is not right. It's nearly 1 billion people that are only represented by one single country. In the same vein, when we discuss financial matters, is it right that, for instance, Switzerland be left out, when Switzerland clearly is a key player in many instances? So the legitimacy of the G20 that was perfectly accepted in crisis times, because the 20 countries represented 85% of GDP, more or less, is now being challenged a little bit in the aftermath of the crisis, because everybody wants to have a seat at the table. And I believe that we need to think about the appropriate representation, whether it's through indirect representation, whether it's through fusion or merger with existing bodies. And here we can obviously think about the CMFI, which is representing better through a system of rotating chairs the whole complexity of the world, including those 15% left out of the G20, is clearly something that we need to discuss. I would discount, although I have huge respect for the organization, anything that would be a la United Nations, because clearly the process by which UN institutions work is too slow to react to current events, particularly in the economic and financial sphere. For those who complain that the G20 is too slow, well, boy, think about what it would be if it was over 160 countries that had to come together and that had to come to terms with sometimes urgency measures. You remember I mentioned something about sub-Saharan African countries that were clearly very much left out in the process of this rebalancing. And yet, some countries are the targets of massive appetites because they produce raw materials, because they have resources. Well, that certainly is one issue that France will be interested to tackle next year when it is heading the G8 and the G20. Because this issue of volatility of raw materials prices, the issue of the management of commodities, the issue of clarity on what happens on the commodities markets, be it the cash market or be it the multiple derivative markets that will be built, that is in existence and that will be developed as the actual underlying factors become rarer, I think needs to be addressed, and needs to be addressed in a very comprehensive, very clear, very articulated way, so that there is no loopholes, there is information, and possibly ways to engage in capping, stopping, slowing down the process, because it's not good for the development of those least developed countries that currently have the resources. So that's, I'm sorry if it sounds a bit disjointed, but I thought I would rather than read my speech, I thought I would, bring a bit more to your group by just talking about some of the key points that we've discussed over the last 3 days. The second set of issues that we addressed over the weekend, particularly with the IMF and also within the G20, is the whole issue of financial regulation. which is obviously flavor of the day today in particular, as I understand that by 5 o'clock today, you all should know whether it's going or slowing, and if it was to be slowed, whose fault it is. And I would propose to articulate my comments about two principles that I strongly believe in. One is clarity, and the other one is accountability. Now, I use the word clarity with a purpose. Everybody talks about transparency, and maybe clarity and transparency are part of the same good intention. But I'm concerned about transparency because I've been, in my previous life, a lawyer. And very often, one of the ways to actually conceal what you're not too thrilled about, what you don't really want to disclose, what you don't want to put clarity on, is to flood the system with masses of information and to say, oh, I've been transparent. It was all out there. Yeah, but there was not maybe the level of clarity that would have been needed given the mass of information that is around. So, clarity, accountability. Clarity, I'll give you a couple of examples of what I mean by clarity. France was pushing and will continue to push the matter of non-cooperative jurisdictions, both in terms of tax cooperation and transfer of information, and in terms of prudential regulations as well, not to mention the whole issue of money laundering. And I find it quite interesting that since the London summit of the G20, at which 34, 35 countries were listed as non-cooperative, since that there have been over 300 agreements signed between then non-cooperative jurisdictions and other countries around the world. Now, to those that sort of cynically say, oh yes, but they've all signed amongst themselves, so it means nothing. Only 10% of those 300 agreements have been signed amongst non-cooperative jurisdictions. So that's an indication that when you really put clarity and you press where it hurts, things change. Things change, but we'd better make sure that they actually change, which is why I think it is good that the compact group that is operating within, not exactly under the auspices, but within the OECD umbrella, headed by François Daubert, is actually doing this peer review audit of what is actually being done on the ground. And I hear those that say, well, it's taking too long, it's not delivering results, and so on and so forth. Well, of course, because, as I said, it's a little bit like the Greek process that I was talking about. We live in countries where we have the rule of law, where we have a democratic process, which is taking its time. I'll take the example of Switzerland, for instance, because I signed with Switzerland an addendum to the double taxation treaty, or the non-double taxation treaty, rather. Now, that addendum, we signed it, over 8 months ago. Now, it's just been ratified by Switzerland, finally, and it was quite a process. It's now up for ratification before the French Parliament, and once that has taken place, then it will be enforceable. And then the peer group has to review that it's actually not only enforceable, but implemented and executed upon. So you see, even when you put strong political pressure, because of the process, because of the timetable of parliaments, because even when there is political will, it takes time, and it then takes review and auditing. The process seems tedious and long, but it's underway and it's making progress. And I certainly draw myself a little bit of optimism from this movement. And the Financial Stability Board, which is one significantly improved and upgraded information, thanks to you, to your boss, Mr. Deputy of the Central Bank of Italy. The FSB is conducting, amongst other things, but is conducting a review of the compliance with the prudential requirements of those quote-unquote non-cooperative jurisdiction, and it will release its report, just as was released the list of non-cooperative jurisdictions from a tax point of view in October of 2010. So clarity means ability to access the right level of information. And I've taken the non-cooperative jurisdictions as one example of areas where clarity is absolutely needed. There are plenty of other areas where that is the case as well. I'll take a second example, and that is what I call the under-the-counter operations, which is often referred to as OTC. OTC, over the counter, my bet. It's under the counter that a lot of those transactions took place. And I think it's perfectly appropriate and legitimate given what has happened and given the volume of derivatives relative to actual cash markets in many instances, commodities for instances, exchange of quotas tomorrow, securities and any other underlying actual real assets there is, that governments should actually want to have appropriate information, appropriate registration, proper clearing, proper exchanges, and that the whole process be supervised. So I know it's not to the liking of many of the financial institutions, because it was a massive source of growth and profit by the same token, but it's clearly a necessity, and one that we, for instance, in Europe, we will push very strongly. Together with my German colleagues, we've asked the European Commission to move ahead faster than it was contemplating, so that in June we have a directive that is actually available and that we will push through the European system. And I'm pleased to see that the Agricultural Affairs Commission is also proposing something pretty harsh, because that's where you have to start if you want to eventually end up with something that is not half-baked and too soft. Second principle, that of accountability. Two examples I will take, and then I will just close. First area, that of compensation. Now, I know that in many corners, the initiatives that we took in Europe, and that certainly I participated in, that my president, Nicolas Sarkozy, pushed very much, was that of accountability in relation to compensation. Not that we are dead against good, high compensations, but we simply think that when there is a bonus, there should be a malus. I'm borrowing from the Romans now. And as a result, we pushed long and hard, much to the frustration and dissatisfaction of some governments around the G20, much certainly to the frustration of a lot of market players who were quite comfortable with the system that were in place. But there is no room for complacency, and there is no room for laissez-faire in that particular field, because very much so the behaviors of organizations is driven by the behavior of individuals, and the behavior of individuals, however faithful we are in people, is often driven by money. So in terms of compensation, bonus, yes, fine. Malus, yes, fine as well. As a result of that, deferred compensation, yes, absolutely, so that people actually are accountable for a period of time and not just for 1 year, go with the money and run. And the same goes with, sorry, I lost my track here. So bonus, malus, deferred compensation, yes. Guaranteed bonus. There's a lot to be said about that. Why would people get those massive packages as guaranteed bonus when they have not yet performed? Now, there's a value to attracting somebody. Yes, take it. I did hire in my previous life, and I did want to attract the best talents. But there is a limit to what needs to be done. And I think as part of Aristotle's principles, balance and reason should come into play. And I'll be particularly interested to look at some of the annual reports of some of the major institutions to see exactly what they've done with this principle that there would be no guaranteed bonus except for 1 year. It's not as if we had completely forbidden guaranteed bonuses, but we said, okay, 1 year is a good package to attract people. You don't need to put, tens of millions on the table to attract 1 star. We know what to do with stars at the moment. Second area where I believe that there should be accountability, and I know that it's not popular at the moment in financial circles to say that, but banks should be held accountable. And clearly one of the provisions of the regulation that is currently under review before the Senate goes to exactly that point of accountability. Now, we don't necessarily all agree yet as to what level of accountability there should be, whether it is sufficient to simply raise capital, to have capital ratios that are very high, to actually prevent the fluidity and mobility of balance sheets by virtue of high capital ratios. We don't always agree, and I personally have reservations about the liquidity requirement ratios that is under review by the Basel Committee. But accountability must be right at the forefront of all of that. Some of us are of the view that there should be taxation as well, because while there is a structure to be put in place to prevent risk from occurring again, and to that end, heavy capital requirements, liquidity requirements, but also pre-bailout procedures and systems that probably would require review of bankruptcy laws in many places are in order. Equally, my sense is that there is a special franchise price that need to be paid by those financial institutions that are so systemic that in any event, whether you put capital surcharge, whether you put bail-in processes, whether you change bankruptcy law or not, there will be an urge, a necessity probably by governments once they've sort of used up the deposit guarantee funds to step in. I think we need to be sort of sensible about it. And just like there should be consideration for anything, that's my legal background coming back, I believe that the price for the franchise has its consideration, and that could very well be in the form of taxation. So, voila what I wanted to tell you briefly, on the financial regulations and those principles of clarity and accountability, on the rebalancing act that is taking place while we need to deal with imbalances, very much so going forward, both in terms of growth in various places of the world, economic models and public finances. And, I would certainly hope that the financial institutions, as much as they will find it frustrating, because change is frustrating, would be reminded that the transformational process through which our economies have gone, which has caused millions of people to lose their house and millions of people to lose their job, is worth a little bit of consideration, and will encourage them to help us to put in place a framework that is going to be conducive to better being around the world. Thank you.